Hello guys, so I'm making this video to explain leverage, stop loss, and how to calculate your risk, and basically just to explain the reason why I do not pay attention to leverage. I don't care about whether I'm on 10x leverage or 100 times leverage. What I pay attention to is this trade I currently have running. How much risk am I exposed to? If my stop loss for a trade gets hit, it gets triggered, how much of my balance am I going to lose to that trade? So let's take, for example, if I have a price movement like this, where this price line at $11 is going to be a resistance level because price has broken down below that level, and this $10 is also a second resistance level. So let's say price came down, broke below the $11, came back to retest it, came back down to break the second resistance level of $10. And now I'm looking to take a short trade because we've lost some significant resistance level, and I'm looking to take this down to whatever next level or whatever target I might have. So then I'm going to be looking for a retest of that resistance level that we are currently below, and then most likely upon the retest of that level I'm going to be opening a short position, and I'm going to have my stop loss at a particular level and my target at a particular level. So from this I have three parameters. I have my entry, I have my stop loss, and I have my profit targets. So I just want to explain this scenario to you to explain how to calculate your risk. And leverage is not a good metric to kind of quantify your risk. You have to know exactly how much you're going to risk on a trade. If you're trying to be an advanced trader, you have to know exactly what your risk is. So for example, if I have a balance of $1,000 and the entry price of my short trade is at $10, that's where I set either my limit or my market entry at $10. I'm going to definitely there's going to be an option for leverage, but I'll come back to this a little bit later. But it's going to cost me some amount of money to open this trade. I need to have a particular amount of money in my balance before I can be able to open this trade. So the cost to open this trade, if I have $1,000 balance, is going to be how much quantity of this asset that is currently at $10. Let's take, for example, XRP at $10. How many quantity of XRP do I want to sell at this area? So that's going to be my quantity. You don't have to pay attention to this just yet. Just note that, okay, let's say I have a quantity of 10 XRP, and then my entry price is $10 and the leverage is set to $10. So that's going to be the cost of opening trade is going to be how much XRP I'm buying multiplied by the price of 1 XRP. That's going to be 100. Then because I'm using leverage in leverage trading, that's going to be 100 divided by the leverage multiplier. So for example, if I had set my leverage to 10x, that's going to be 10 quantity multiplied by 10 price, that's 100, divided by 10 leverage. That's going to give me the cost of $10. This is not the cost price, this is the cost of opening the trade. That's going to give me $10. Now let's take, for example, according to my analysis, I have a stop loss projection of $11 because that is where the previous high of the move was, and I do not want to see any push back to that previous high because that would basically signify that this resistance level has been reclaimed, and I do not want to keep holding the trade if we are climbing above a resistance level. So let's say my stop loss is at $11. Then my potential loss, the amount of money I'm going to lose if this trade goes against me and actually goes up, to trigger my stop loss, the amount of money that I'm going to lose is going to be calculated like this. That's going to be at what price point did I enter the trade. That's going to be $11 minus what my stop loss price is. Sorry, that's going to be the $10 entry minus what my stop is at. That's $11. That's going to give me $1 per quantity of XRP which I have opened. So I'm going to lose $1 per quantity of XRP, and I have 10 XRP quantity open on this trade. So that's going to be 10 minus 11 stop. That's $1 multiplied by 10 quantity. That means I lose $10 on this trade, and my new balance is going to be $990. So that's basically when you look at it from a leverage perspective. But what I'm trying to explain now is that it's much better if you're able to have a projection of this potential loss even before you know the quantity. You do not know the quantity you want to open yet, because you don't know how much of this asset you're going to buy for you to have this amount of risk on the market. So I'm basically just trying to introduce this TradingView tool. I don't know if some people know about this, but TradingView definitely has this tool within the position tool, where you can use the data from the price to calculate how much quantity you need to execute for you to lose a specific amount of money on a trade. Let me explain this. So trading is a game where you have to manage, you have to control your risk, and you have to just focus on the risk and not much about the reward. You want to know, if I'm trying to capitalize on this opportunity, what a percentage of risk am I willing to take for this specific trade. So if I have a balance of $1,000, and then I look at it like, okay, for this single trade, I do not want to risk anything more than $10. That means even if the trade goes against me, my stop loss hits, I should not lose more than $10 from this balance. So if I know how much I'm willing to risk, all I have to do is basically come into TradingView, put in, after maybe if you did the analysis yourself, just according to how your analysis and the price action is, you know where you want to enter the trade, you know your stop loss level, you know your target. So all you have to do is just put this drawing and set it to those specific levels. So for example, I take this drawing and I put my entry at $10, I put my stop loss at $11, and then where my target is going to be. And then once I have set this position tool, all I have to do is double click on it, or come into the settings icon here and go into this inputs. Check this inputs. You're going to put your account size. That means how much you have in your trading balance, which is 1,000 for this example. Your account size, your lot size is this is lot size option and TradingView. It's not really relevant, but you have to set it to 1. You have to set it on 1 for this to work. It has to be on 1, because we basically don't use lot size calculations in crypto trading. So just set it on 1. That's like you must set it on 1 if you want this to be calculated correctly. And then at this risk level, this risk area, you are going to put your predetermined risk. You know how much you want to lose on a specific trade. As I explained here, I know I have a balance of $1,000, and I know that I just want to put a risk of $10 on this to capitalize on the potential move. That means if I am wrong, I only lose $10. So I know that before I trigger the trade. All this is before you execute the trade at all. So you put your risk here, a $10 risk, and once you put the risk there, because if you did the analysis yourself, you definitely did the position drawing by yourself. So all the parameters where you put your entry, your stop is going to be in here already. But if you did not, all you have to do is just take the take the let me just do it again so that you can see. Take the position drawing tool, place it basically anywhere, tap on the settings, look at your trade signal, look at what particular entry price is labeled on the trade signal, and just put it here. Let's say $10 entry price. That's going to be 10 here. Come on. Why is it not staying on 10? I think this is because the price of XRP definitely isn't at $10 yet. So it's a squeezed chart because I had to, you know, shrink it together for me to get to this $10 level, because this is a logarithmic chart, so it's not a regular chart. So basically just come into here, put in your entry price, put in your take profit price, put it in your stop loss price as predetermined already. So for example, here the entry price is 10, you put 10 here, the profit is, I don't know, wherever it's going to be. I'm not paying attention to the profits for this explanation. And then I know what my stop loss price is, so I put my stop loss price here. That's basically it. And then it's gonna get positioned exactly at those price levels on the chart. And all you have to do is just come and put in whatever risk you're willing to risk on the trade. If it's $100, whatever it's going to be. For this example, it is $10. So once you confirm these settings, it's going to give you the exact quantity of this asset you need to purchase for you to risk $10 at an $11 stop loss level. This is going to be calculated for you already. So once you know this quantity, okay, the quantity is going to be 10. It's calculated with TradingView. If I change this to probably like a $8 risk, it's going to change. It changes to 8. So depending on what your entry price, your stop loss is, it's going to calculate the exact quantity of assets you need to buy for. This quantity is not equal to the stop loss or the amount of loss you're going to lose. I think because this is just a controlled example, that's why everything looks like it's fixed at $10. But if you add a random stop loss at whatever price, let me just make that clear with an example. Let me just change the entry to 10.5. You're going to see that the quantity, or let me make it 10.1. You see that the quantity changes to 11.111. So depending on what your entry price is, what your stop loss is, it's going to calculate the quantity for you. So what you have to do is just take this quantity, go into your trading terminal, wherever, Bybit, Binance, wherever. There's going to be a quantity section for that you can input this specific quantity into. And then once you input the quantity and you trigger the trade and you set the stop loss, it's basically going to be that even if you add 100 times leverage, as long as you have enough margin on your trade, you have enough margin to cater for a $10 profit and loss movement, a minus $10 profit and loss movement. It doesn't matter, you will only lose $10 on that trade. So you have to know, you have to predetermine how much risk am I willing to take on this trade, and then you just place that risk here into TradingView after you've set your parameters, and then it gives you the quantity. Once you put the quantity in your trading terminal, you put your stop loss. You are not going to lose more than that amount which you have pre-calculated already. So let me give an evidential example. Let's take, for example, if I don't want to emphasize that the leverage doesn't really matter. If it was 3x, if it was 10x, if it was 20x, if it was 50, if it was 100, it doesn't matter. I would always only lose $10 because I have calculated the amount of quantity of these assets that I need to buy. I've calculated the quantity of the asset I need to buy, and also I know what my stop loss is. So all I need is the quantity the entry price, the stop loss level, and the take profit level. That's all you need. And to get the quantity, all you have to do is take your entry, your stop loss, and your take profit, put it into this tool, and let it calculate it based on your account's credentials. So I want to emphasize that the leverage doesn't make sense. For example, if the leverage was on 20x, or let me say 5x, if this was on 5x, that means the cost of opening this trade is going to be the quantity, which remains at 10, multiplied by the entry price, which still is $10, but then the leverage is going to be 5 times leverage. That's going to be 10 multiplied by 10, that's 100, divided by 5, 5 times leverage. That's going to give me, I'm going to need $20 for me to be able to take this trade on a 5 times leverage, but that does not affect my loss level. The loss level remains the same because the leverage does not influence the loss level. As long as you know the exact quantity, that's just what you need. As long as you know the exact quantity and the stop loss price, the stop loss level where you want to get out the trade, the leverage does not matter. So your potential loss is always going to be your entry level subtracted from your stop loss level multiplied by the quantity. The leverage has no influence on how much you lose on a trade. So what you need to know before you execute a trade is what is going to be my risk level for this trade. How much am I going to lose if this trade goes against me? And just think about that. Let's say if I wanted my potential loss to be I have $1,000 in my balance. If I wanted to risk $25 for this trade, all I have to do is come back here into here, change my risk to 25, make sure that this is on USDT, not on percentage, USDT 25, and click OK. Then you calculate my quantity. So now my quantity changes to 25, and then to know what my potential loss is, I don't really need to know. It's just calculated already because once I put my stop loss in, I know that I only want to lose $25, so I already put that in here. I know that if my stop loss gets hit, this is what I'm going to lose because the quantity is calculated already. So it's going to be the entry price $10 minus the stop price 11, that's a $1 difference, multiplied by the quantity of 25, and that's going to give me a $25 stop loss. And then basically that's just what I'm trying to explain. Like, a lot of people seem to like pay a lot of attention to leverage to kind of calculate what their risk is going to be, or whatever. It doesn't really matter. It doesn't matter. The percentage gain does not matter. The percentage loss does not matter. The leverage does not matter. What really matters is your risk, your potential risk, your potential reward, your quantity, your entry price, your stop loss, and your take profit price. That's all you need to take a trade. If you place the same trade on a 5 times leverage, if you place it on a 10 times, if you place it on a 100 times leverage, it does not matter. As long as your quantity remains the same, the stop loss level remains the same, and basically it's so. Just to recap, the leverage on which your trade is based on does not influence your potential loss, as long as you know exactly where your stop loss level is and you know your quantity. So the main thing is to find that quantity, and to find that quantity, all you need is your entry price and your stop loss price. Just come in here, trading view, put in your entry price, put in your stop loss price, put in your take profit price, and put in the amount of money you're willing to risk on that trade, and just click OK, and it gives you the quantity. Take this quantity, put it in your Bybit, put it in your Binance, put it in your Coinbase, wherever, put that quantity in, put that stop loss in, and execute the trade, and you will not lose more than your calculated loss for that specific quantity. This might be kind of cumbersome for some people. It might be difficult to do all of this, but this is the best way to trade in my opinion, and it's the best way to define your risk. defining your risk with leverage is it gets very random. You do not know exactly how much you're going to lose. Definitely, if you put all these parameters in your trading platform, your Bybit, wherever, you put your leverage and put everything, and you put your stop loss price, it's going to calculate. It's going to give you how much potential loss you're going to lose if your stop loss hits. But that potential loss was not predetermined by you. It was calculated just randomly based on the random parameters you have imputed. So I'm just laying emphasis on, to be a great trader, to be successful in trading, you have to always determine your risk. You have to always have a predetermined plan of how much you want to risk. Am I losing? Am I risking 1% of my uh, of my balance? Am I risking 5%? Wherever that value of that percentage is. If it is $50, if it is 200, if it is 5,000, it doesn't matter as long as you know how much you want to risk on this single trade. Take that risk. If I want to lose $50 on a trade, take that, come into here, put it inside trading view, put it here. If it's 500, put it there, put your entry price, or just draw it. If you're doing analysis, or if you know the specific levels, just put the drawing, place the drawings on the lines, and just click on OK. It gives you the quantity, take the quantity, put it in your Bybit, paste the trade, put your stop loss. Your risk is defined 100%. Thank you.